where the market is right now, it's reflecting not necessarily broken market fundamentals, but extremely distorted market fundamentals. So we've had demand in shock as a result of these coronavirus-related economic shutdowns across major economies in the United States, in Europe, India, China, and it literally demand has kind of fallen off the chart, if you want to think about it in your kind of economics 101. And we have not seen a supply response yet that has been quick enough to allow the market to find an equilibrium at positive price levels. So we've had this kind of, in a way, natural reaction for prices to push into negative territory. As we go forward, we're going to have to see much more of a sharp supply response in order for prices to normalize at some kind of positive level. And I think the point you're making there that's really crucial is that the storage element, which could offer as a kind of alternative to consumption, an alternative to demand, that's basically at full levels right now. So it's not really offering any ability to take any of the relief out of the market. And if that remains basically stuck or filled up for the foreseeable future, then the potential for prices to test lower is very likely.
When do you see the demand picture improving? Because the impact of COVID-19 really has to push that recovery a long ways out, would you say? Because the demand picture was already struggling before the impact of the virus on demand for oil.
Yeah, it's very unclear when we're going to see any kind of recovery in really consumption, which was what is necessary for the oil price to get a beneficiary signal from the demand side. Moreover, if we get out of the severe lockdowns, we don't necessarily see that we're going to see a big pop in the oil market, so that consumers are not going to be taking extra trips, for instance, to make up for those that they forewent during their lockdown phases. And we might see some more permanent shifts in consumer behavior. So people traveling less, meetings happening less face-to-face, that they can be happening virtually, perhaps some industrial processes that are going to be more localized based on consumer preferences. So all of those do have a negative long-term impact on the demand trajectory for oil.
Ed, it's Dan here in Australia. How close are we to tank tops? We've seen analysts at Bank of America saying that capacity utilisation at Cushing, for example, is up around 70%. They've warned that in recent weeks we could see limit up at Cushing. What is your own data telling you about where all this excess crude oil is flowing?
Yeah, it does look like we're pretty close to those, to inventories basically being at total capacity right now. Our estimates based on what the U.S. numbers are publishing is that total storage capacity, or total storage in the United States, is roughly around 77 to almost 80% capacity. So we might only have a few weeks left of production hovering around the 11.5 to 12 million barrel a day level that the U.S. is producing before we get to inventories being completely filled, and you start to see more of the distortion in pricing, particularly in the physical side of the market, where we have had some indications of negative prices before yesterday, and that might filter more into depressed conditions for futures prices, potentially with a retest of negative conditions in WTI, and likely dragging Brent prices lower as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.